How's it going, everybody? My name's Antonio, and I'm here today on October 2 with Stephen Stewart, CEO of QC Copper and Gold. Well, you might have guessed it, a gold and copper development company with assets in the Chibougamau district of Quebec, Canada. Who's not here with us today, though, is your financial advisor. This conversation is not going to include any recommendations to buy nor sell anything. It's going to be a casual talk between two people who you've likely never met, aka talking heads. So for as far as you as a listener or viewer are concerned, this is going to be a conversation that's general and impersonal in nature, as well as a conversation that is definitely not meant to be used as independent research, because it's also going to include a whole lot of forward-looking statements about uncertain events that may or may not happen in the future. I would suggest, although I just told you not to take advice from talking heads on the internet, I would suggest you take the minute to pause the video and read the full warning that is on your screen right now, because this industry, the mineral exploration, development, and mining industry, is among the highest risk industries out there. So if you care about money, you have to do more research by visiting the company's website and analyzing its official filings on sedar.com, as well as consult a professional investment advisor before taking your own decisions in the end. That all said, QC here is one of the 6 companies that make up the OR group, and this is a $21 million market cap company, which is divided over 174 million shares outstanding, and that makes this a 12.5-cent stock. There are 15 million warrants and options altogether, which means that there are about 190 million fully diluted shares. Stock trades on the TSX Ventures Exchange and at the ticker symbol QCCU, where an average of about, let's call it 85,000 shares trade a day, with a 52-week high of about 19 cents and a 52-week low of 12 cents, pretty much where we are at right now. At the end of September, the company had $5.7 million in cash, almost 11 million shares of baseload energy, which is another one of the OR group companies. This is a uranium explorer with a stock price of about, let's call it 44 cents, which means that QC's holding of the company would be worth about $4.7 million. There was also $2.4 million in account receivables and some prepaid expenses, bringing their current assets to about $12.8 million. That is against current liabilities of basically nothing. There's about $150,000, so no debt and no long-term debt either as of now. QC's current focus is the Opemiska project. Opemiska is a historical open pit mine that started producing gold and copper a whole long while ago. It's close to the town of Chapais in Quebec, where I believe they produced up until the 90s there in 1991. The idea when taking over this mine was to bring it back into production with limited drilling and relatively quickly, but through drilling, it turned out that there is much more copper and gold there. So the geologists followed up the mineralization through almost 100,000 meters of drilling has happened in the last 3 years, with the final 10,000 meters being completed this summer, and over 60,000 total has been completed since 2021, since that initial plan. And so we are currently awaiting an updated pit constraint mineral resource, which was expected earlier on in the year. So we're going to be talking about that, of course. And now it's expected in Q4 of this year, specifically in about, let's call it 50 to 60 days from the time of recording of this video. And the company also potentially wants to follow this up with economic studies in 2024. What previously came out of the ground and into that maiden open pitable pit constraint resource estimate was 82 million tons at 0.88% copper equivalent, that is in the measured and indicated category, and another 21 million tons at 0.73% copper equivalent in the inferred category of the NI 43-101. That was, or that better said, resulted in a total contained copper equivalent of 1.6 billion pounds in the measured and indicated category and 345 million pounds in the inferred category. And about 70 to 75% of this is actual copper. The rest is gold, and there's a little bit of silver too, both of which, by the way, so gold and silver have recoveries in the 85% range, where copper is getting a recovery of well above 95%. Again, though, 135 holes have been drilled since that resource estimate was published in 2021. So the new one is expected to bring changes into those numbers that I just went over. It's also worth noting that the conceptual pit that we've seen so far is actually 2 pits, so 2 starter pits, which represent about 10 million tons with an average grade of 1.26% copper equivalent. So this is very high grade starter pits basically, and they're also lower strip the starter pits, which is expected or believed to have the ability to lower the payback period for the initial capex through the early cash flows that are expected from the project. So Opemiska will be the focus of the discussion today. So I guess I'll leave the rest to Stephen, but I'll also briefly mention Roger here, or as Charles likes to call it, Roger, which is the second project that QC has, not too far away from Opemiska, still in the same neighborhood in the Chibougamau district. And this is a gold project. So we see about 500,000 ounces of contained gold in the indicated and inferred category, and QC owns 50% of it. So I'm hoping for an update on that too, but that's not going to be necessarily the focus here today. For all that to happen, though, I'll have to shut up already and welcome the CEO. So, Stephen, thank you for investing your time in me, sir.
Antonio, thank you. That was a very good and comprehensive update.
The pleasure is all mine, of course. I've been following QC for a while now, and fair disclaimer and honest confession to everybody listening, I am a baggie, so I am underwater, but I do own the stock. But why don't we start off? Why don't we start you off lightly, Steve, and give me sort of the three things that you like, but maybe think are underappreciated when it comes down to QC as a company. But then also give me three things that they're not so much your favorite. Something that you would change if you could do so by waving a magic stick at it.
Sure. Well, I'll talk about the asset specifically, and as well as the company. But to me, what I love about the Opemiska is it's great. It is, as far as I know, the highest undeveloped pit-constrained copper resource in Canada, top three in the Americas, and its size too. If I'll sort of blend those two together, it's in the top 20 in terms of size, and so that's always a consideration when you're looking for base metal copper project. Is it big enough? This is big enough. But more importantly, this is grade and hopefully margin. But obviously, we have to demonstrate margin as we move it forward to economic studies down the road. The other is area, where it is, which is also a good and a bad. But to be in Quebec, in the heart of Quebec, with access to infrastructure. But let's talk about Quebec itself. Quebec is far and away within Canada the best jurisdiction. Canada is, in my opinion, the best jurisdiction, of course, but a big place. Quebec is totally supportive with the Plan Nord. The Quebec pension funds are incented to invest in early stage exploration companies, as they have from QC Copper virtually every step of the way. There's a very generous flow through regime, which lowers our cost of capital when we do our financings. You can see we do them at significant premiums for money that's not spent or not taken in as flow through. Call it hard dollars spent in the ground. We get 40 cents back on the dollar. So every dollar we spend, we get an extra 40 cents. I could go on about the benefits of Quebec, but I think that just sort of illustrates how important it is to be in the province and how beneficial it is. In fact, it's almost unfair relative to other jurisdictions around the world, because it just lowers our cost of capital, and we put that capital into the ground, which in turn de-risks the project. So that's the biggest advantage. I'll say that the opposite side of that, where we are relative to the town of Chapais, that's our biggest risk going forward. But I'll finish my second, or I should say my third favorite thing is the value, and that's, I'm just value oriented. When you say that we are a $22 million market cap company, wow, it's sort of, it's mind blowing to think that's where we are. And to me, that just says the market doesn't believe what we have, and I think in time they will. But we've got to hit some of these milestones and continue forward. But I mean, the market is just totally ugly right now, so we're not exactly an outlier. But nonetheless, it's value. When you say we're 22 million, then we have, as you quoted, 12 million of working capital, which is true. We've got about just under 6 million in cash, plus about 3 in accounts receivable. So basically, between our accounts receivable, which is government accounts receivable, so as good as cash, plus cash in the bank, we've got 8 million in cash, plus that position in baseload energy. So what you're paying for, I think, the premier copper gold asset in Eastern Canada, in the best jurisdiction, on the rail, on the road, with access to clean, green, renewable, low-cost hydroelectric power in the province of Quebec, with the province behind us, with the town supporting us, with the partnership with the First Nations. I think the value is evident, and we are just suffering through the doldrums of the market, which is something that's always tough to see. It's very difficult to see your share price at 12.5 cents when you have something that's worth substantially more. But that's what value investing is, particularly in the junior resource space, where it is the most inefficient market out there. So you know, I encourage people, take a look at us, buy our shares, but do your due diligence. But you also have to be patient, because I don't know when things are turning around. Obviously, that's not specific to our project. This is specific to copper price, the sentiment coming into the juniors. That shift will come now, whether it comes in 30 days or 3 years, I just don't know. But what I do know is that we own a fantastic asset. We think it has a legitimate shot of becoming a mine again. I believe it's anchored in the Chibougamau district, which itself, we can talk about that after, is going to be reinvigorated by having the Opemiska go back into production. There are many, I won't count them, but many, call it orphan assets in the area that become economic when you put a mill there. And so this whole district is really, I was going to say nascent, actually, but it's old. It's a mature district. It's well understood, but hadn't been evaluated in the context of open pit mineralization. So I'm extremely bullish on the Chapais-Chibougamau district, with our asset being the anchor of everything. I think it all begins and ends with the Opemiska. Now, the three things that I don't like: price. I mean, again, to make a big difference between price and value, but our price at 12 cents, I already touched upon that. That's tough. Shareholders, you know, aren't happy. I'm not happy, but I have to have a long-term view. We juxtapose that with our balance sheet. As I said, we've got a lot of cash. We're extremely strong relative to our contemporaries in this market right now. That's all hard dollars too, so there's no spend commitment. We're in a good financial situation, plus that baseload position of nearly 11 million shares. Baseload's trading 45 to 50 cent range now. Last time we sold baseload shares, it was north of $1. I do think baseload has the opportunity to be north of $1 again, especially as uranium's going north of 70. Who knows? But baseload's well financed, as you know. It's going to be putting money in the ground. It's got a great team. So I think, you know, even if we got zero for those shares, we've done, you know, we hit it out of the park with the baseload investment. But I think that's going to continue to pay dividends, so to speak, to the company, and ultimately allow QC Copper to put more money into the ground and do interesting things. Second thing is the town. It's, you know, and I'm not disparaging the town at all. The town is fantastic, good people, mining culture, mining town. That town exists because of the Opemiska mine when it operated for 40 plus years, and as you say, shut down in 1991. But we're too close to it. But one could make an argument that, you know, any open pit is too close to any piece of civilization in anywhere these days. But Canada is no exception. So we are proximate to the town of Chapais. When we acquired this project in 2019, we went up there and we held a town hall meeting, and we told them exactly what our plan was to reinvigorate, reinterpret what used to be an underground mine with a relatively small footprint, turn it into a bulk tonnage operation, which has a big footprint. There would be implications of that, obviously noise, dust, etc. There's certainly the possibility that some of the structures, including houses, could be moved. We have not defined that yet. We're not ready. We'd have to get into the economics to be able to determine if we're going to actually propose moving structures and houses, etc. That would also be a trade-off portion, because it's very clear that the richer part of the deposit's away, and so potentially there's a smaller open pit scenario that we could do if we decided that the cost, expense, and risk was, and timeframes, was too high to attempt to move some of the houses. But that's something that we'll get into potentially into 2024. At minimum, we'll need a PEA in order to be able to define that sort of situation. But again, we've been forthright with, you know, investors and the town. We will have a material impact on the town. However, we believe the net is positive. We think we offer the opportunity for people to stay in Chapais. Chapais right now is depopulating, if you will. So there's not a lot of reason for people to stay. There's not a lot of tax base there. We're offering the opportunity for that town to get better infrastructure, schools, hospitals, etc. And then the last aspect, but certainly not the least, is the delays. We have been wrong in our interpretation of how long it would take to go from 2021's resource to what will be the end of 2023's resource. Obviously, we've done a lot of work in between there. I mean, we did 50 to 60,000 meters worth of drilling. We've done a lot of metallurgy. We've done geotechnical work. Obviously, lots of consultation, but the bulk of the work has really been about reinterpreting the geology. We tore down the database that we created in 2021 and was created on behalf of us. And I don't want to say we started from scratch, but we really, this is what the premise was. I mean, obviously the premise is always about getting the resource bigger and better. Okay, so bigger meaning more copper pounds in the ground, and better meaning copper grade. Can we do that? Can we, and where are the holes in the resource prior to it, and can we fill that in, and can we get the strip ratio down? There's all sorts of ways you want to optimize it, and that's what we've endeavored to undertake from these last 60,000 meters. But also we huddled around and we had a lot of discussions, and we figured that this is big enough and this grade is good enough. It's going to be economic. It's going to be a mine. Again, you have to put that in the context of time. We cannot say when, but we believe that this is an economic deposit. And so the question then becomes, who's going to build it? And I don't think it's going to be us, because we're not mine builders. I'm not a mine builder, and I don't endeavor to be a mine builder. I'm a value creator. I'm a project consolidator. We're very strong on the geology, but we've never built or operated a mine, which is a completely different skill set. So then we started thinking, we need to deliver a top-notch, top-quality database, one, and two, an interpretation which falls from that database, so that when the just call it the big guys, or the strategic investors, or for the purposes of permitting, get in and look at our database, they see quality and they trust us. I didn't want to get to that point and have to make any changes down the road, so we decided to, this is when we're going to get it right. And so that has taken us longer. And then when you layer on the fact that the database is huge, by far the biggest database we've ever dealt with. It operated for nearly 50 years by a major. And so the sheer quantity of data that we've inherited, and call it processed, reprocessed, and corrected. I mean, there's all sorts of, little errors. And, when you go from analog to digital, I mean, you name it, we've dealt with. It's been a really wonderful, trying experience, but we learned a lot. And probably we would do it faster if we were to do it again. But I mean, this is all good work. It's all quality work. And that's the essence of what we aim to deliver is quality. And unfortunately, it's taken longer than we anticipated. And I think we've been straightforward about exactly what we're doing, why, and tried to be as candid as possible about the position that the company is in.
Thank you for the honesty here, and also thank you for the honesty in reporting and following up with updates as you're going through these delays. You've done that a couple of times, and I commend you for it. I've appreciated it as a shareholder. I know others have too. And there's lots to touch upon in what you just said here. One thing though that I wanted to, one of the positives that you said, top 3 asset in terms of grade, top 20 in terms of size, all nice things. One of the top assets in Canada, specifically in Quebec, and it's trading at a enterprise value of sub 10 million. That's what you're essentially paying for this. And so, I get that a lot when I'm interviewing CEOs. They would think their company is undervalued because your baby's the most beautiful one. We all know that. But why? You haven't been buying a lot in the open market. Insider ownership is not huge. It's not inexistent. You own, I believe, 2.5% of the company or something along those lines. So you do own a chunk. But are you allowed to? Are you blacked out from buying right now? And if you're not, are you planning on buying in the open market?
I don't know percentage wise, but I own something with an 8 million in there. This year I spent $110,000 cash exercising options and warrants. Obviously, those are below the current price, but that's still cold hard cash. 2022, I put a lot of money in as well. So I have been putting a lot of money into this company, and I've never sold a share, and I've never received a free share or a promoter share in QC Copper. So I have invested substantial capital into this company. I am I believe the single largest shareholder. I'm absolutely a buyer at these prices. I'm not in blackout currently. I'll probably be in blackout shortly. But I think both Charles and I are buyers at this price, so you can probably expect us to act on that. And I think that's important. That's a fair question. People want to see us put our money where our mouth is, but I think we have. I mean, I can only speak for me, and in having 8 million shares in a company, all paid cash, and I have been consistent. I don't do it every month, but I over the years, I fairly consistently buy $10,000 here, at a time. So I put my money where my mouth is. But most importantly, Antonio, this is reputational. This is personal. This is a company that Charles and I founded. We want to deliver. This is about us achieving success, and I think we will be associated with QC Copper for a long time. We want that to be a very positive situation.
Fair points. You said 8 million shares. There's about 175 outstanding. So on an outstanding base, I stand corrected. It's 4.5%, 4.6% to be specific. So it's not 2, and it's
something like that. It's 7. It's a high 7 or an 8. I haven't looked at it recently, but I mean, I just bought a significant chunk recently, and I haven't done the calculations. But I own a lot. I mean, I think that's by most standards is quite a significant piece.
Good. Let's talk about delays, timelines, and all that, because you recently had a news release. I should have noted the exact date, but it was not too long ago. And you said it's 60 days. We're 60 days away from within a period of 60 days. You expected to have an updated MRE, but there's other timelines before that had changed because of the aspect, as I mentioned, of the deposit and what you had found there. Like for example, you had initially thought about a PEA in 2021. What happened there exactly? What's the story behind you not getting one out in 2021?
Well, simply because we knew that we had work to do. It's sort of, I say it's a Bayesian, meaning once you receive new information, you need to change your course. You cannot stay transfixed on your target if you've received new information. So yes, you're absolutely correct. In maybe early 2021, prior to us putting out or really understanding what the Maiden Resource said, we were thinking, okay, well, once that's out, we go to a PEA, which is kind of the stage we're in right now, because we're going to go to PEA after. However, what was evident to us is that there was a lot more work to do. There was a lot more to capture, so more pounds in the ground. And then I think the quality, I'll go back to the quality of the resource that we're going to be having in 2023 is going to be materially better. Not that we knew that when we were saying PEA, but again, it just goes back to there's more to capture. And even when we're done, our drilling done right now, so even though we've done, let's just say 60,000 meters since that initial resource, there's still more drilling to be done. And I'm not just talking PFS drilling where we'll upgrade it to everything to M&I. There are zones that we have discovered that we just didn't have the time to follow up now. So there is more, even what it was. So whatever comes out in terms of pounds and grades, there's still more to be discovered in a pit constrained area on the Opemiska, outside of the Cook, Robitaille, Rogers, etc. So there's still more copper and gold to be delineated here. So we're learning. It's an ever sort of changing process. And so when we pivoted away from rushing into a PEA in 2021, or it would have been 2022, we decided we needed to put those 60,000 meters in. Clearly, look, we put 20,000 meters in, so we would have had a premature PEA, frankly. And we made that decision, and I don't regret it for a single second. However, I do think that now, even though I just said that there is still areas to expand, and there is, that would be contemplated in a PEA, we will pivot towards a PEA, call it for 2024. We started a lot of the work already, but we haven't officially launched it because we need to have the geology done. But there's little doubt in my mind that PEA is the next step for the Opemiska open pit.
Well, so you say that you're not regretting doing all that extra work, and so I understand where you're coming from. So the data that you're going to come out with the MRE, whatever the numbers might be, it's going to be a higher quality database, and that's important for the potential party that's going to take over, be it a major or maybe speculating someone who's already in the district. But whatever. So I get that, you get that, analysts get that. Does the market get it though? Because if the market's waiting 2 years for a resource, wouldn't they want to see a significant increase? I don't want to speculate about numbers and how much it would be, but the market's going to look at size and grade. That's it. They're not going to look at the they're not going to look at the quality of the data, I don't assume, and think, oh, this company's now worth more because of the quality of the data.
Yeah,
so I suppose that's pressure on you.
Well, sure. I mean, look, I understand what the market expects. Well, look, I am certainly in this environment. I cannot speculate what the market wants. I'm done playing that game. It's impossible to say, but you call it intuitively. Yes, people want more pounds in the ground, higher grade, better strip, etc. I get that, and we hope to deliver that. That's for sure. But as of today, I don't know the numbers. I mean, factually, we have not run the pit to give us tons and grade. We don't know. That's coming very, very soon, obviously, as we've committed to get the numbers out in 60 days effective. Let's just call it to the end of November, which we, look, anything could happen. But obviously that number was very carefully reviewed and vetted, not just internally, but externally, because I didn't want to have egg on my face again. But get it, aside from bigger and better, what, call it the average investor wants. It is about quality. And so, look, I can't, I don't deliver. How do I put this? I care about every investor. Okay. And every dollar that comes in and what they want. However, sitting in my seat, in the long-term view, what I really care about is this project and delivering a high quality database and resource. That's the most important thing. You can put out a shoddy resource that surprises the market, but you're going to have to pay for that eventually. And so we don't want to be in that situation, because we're here for the longer term. We are speaking to who's going to buy this thing, not to John Smith, who is in here for a quick flip. That is our approach. Maybe that doesn't suit everybody, but again, it comes down to project management, long-term ownership views. That's how we're operating this company. And ultimately that's what we'll deliver. But look, we hope to impress the market. It's very difficult to impress the market right now. I mean, I can't see, nothing, just digress for a moment. Nothing matters right now in this market. The sentiment is as bad as I've maybe ever seen it. Unless you are the 1% drill hole or the 1% report, everything's viewed as a liquidity event. So, one could make the argument that it's been beneficial for us that we have been delayed. It's not beneficial from call it a reputational standpoint, and people who are following us closely. But if we put out whatever, let's just say whatever the report says come November 30th, whatever, had we put it out in June, would we be 12 cents? I mean, I don't know. That's a theoretical question, but I don't think that the market cares unless you absolutely, shock and surprise and awe, which, maybe we'll do. But I mean, you can't expect to do that on every report, every drill hole. Again, I can't think of too many reports, if any reports that have come out over the last little while or even longer, 12 months, that have really been value driver, price drivers, I should say. Now, again, I go back, value drivers. So I'm focused on value to the company as opposed to price. Now, I think price will eventually catch up, but sometimes it lags. And so this market is extremely challenging to deal with, especially when you're faced with delays like we have been.
It's interesting you're mentioning market conditions here, because indeed, when you made an update video on this about what must have been 3 months ago, probably, when you announced the delay the first time, you said that the delay in and of itself might turn out to be a blessing in disguise, because the copper price and the gold price were weak and sentiment in the field was bad. Things have actually worsened since sentiment. So so you're not necessarily taking that into your consideration? I mean,
absolutely not. We are not. I don't get cute with the market. I don't. Tomorrow could be even worse, and the day thereafter twice as bad. I mean, look, there's a war with the war escalates in Europe. If a war evolves in Taiwan, then forget it. Sell your copper. Basically. So I do not predict the market at all. I'm just sort of saying in sort of circumstances that we don't control, it's not been a conducive market to put out a report. We could get, the converse is, sure, we could get lucky and get some tailwinds. But we also could get unlucky, and it could continue to get worse. I have to hope, though. I mean, look, 60 days is not a long. I don't expect the next 60 days. Call it the copper market and all the geopolitical issues, which are pretty significant, to resolve themselves. Although that doesn't mean we couldn't get a rebound in sentiment. I don't know what that would drive that. I wish I did, but everything is looking pretty gloomy. But things change. This is a very volatile and cyclical sector. Everybody knows that. So I have faith. The only thing that I don't control is the timing of when this sentiment comes back. But we own our asset. As I said, if I haven't emphasized it enough, we have a good deal of faith in the quality and the size and the grade of this asset and the jurisdiction. So we believe that when the market does turn, we're going to own a very, very valuable and highly coveted asset, and what I think is one of the most important commodities of the commodity suites.
So basically, as a CEO of a public exploration company, you're not only managing the uncertainty of the market, but also the uncertainty of Mother Nature and the desires of anonymous online posters, which it sounds like a fun job. I mean, I'd sign up any day. But in that spirit, we all know, of course, that anonymous online boards are the absolute best place to get information on. Said nobody ever. But so someone said, by the way, that because of some of the deals that you've been making with some of the other companies that you're involved in this summer, you had basically put aside doing work on QC. I know that's not like that because I talk to you often, but I think that's something worth targeting and addressing.
Sure. So what aspect of it? The fact that I do other things, somehow this has led to the delay? Is that?
I think that's pretty much what someone suggested. Yeah.
Well, look, I think that's I think that's categorically not the case. Everybody who knows me knows I do many things. That is not new. That has been the case since day one in QC Copper. So that's not something that was introduced during this period first. So like everybody who's follows us know we are the ore group, and we do many things. QC Copper is definitely one of my focuses. There's no question about it. I am the CEO of QC Copper, although I am, I'm going to be transitioning out of that role at the appropriate time, because to go from 22 to 250 to $1 billion, which is, on the table under the right circumstances, it needs somebody full time. However, I'm not doing this. Like, let me emphasize, I don't do this technical work. I am not a technical guy. I am certainly involved, and I'm there, and I know what's going on, but I'm not pressing the buttons on the keyboard. I'm not looking at the core. So this job falls primarily to two people. Charles Beaudry, of course, you've seen many times, and I think you've spoken to Charles, is the key technical individual on this, and this is his technical baby. He originated this project. He's got a very, very long history dating back to the early 2000s on this project. So he knows it as well or better than anybody, I would suggest. And then, of course, the second person that came on later and towards the end of 2021 is Francois Thibert, who was our resource geologist. And I mentioned at least in our most recent news release, but probably on other occasions, that we have our own in-house resource geology team, which is different. Charles is an exploration or an economic geologist. He's not the guy that builds the resources and the models. Very, very, you have structural geologists, you have, people who focus on volcanoes. So there's many different branches of geology, if you will. Not that we have the volcano type, but the point I'm making is that we brought in Francois to show us the gaps, allow us to fill in the holes, etc. So, I am not doing this work, quite frankly. I'm certainly overseeing it. I'm managing. I'm responsible for all oversight, moving things forward, making the decision. Now, at the end of the day, I take full responsibility. These are the individuals that I have entrusted. Charles is my partner, but I entrust Charles, and if I felt that Charles wasn't doing the job, we would make changes. And the same thing with Francois. And if the board feels that I'm not making those correct decisions, then it's the board's prerogative to remove me. But the buck stops with me. Make no mistake about it. But my participation, I mean, I'd be just sitting there watching Charles do things that go over my head. Not to say that I'm not, again, like I want to emphasize, I am pretty good on the technical side, but you're certainly not investing in QC Copper for me to underwrite my geologic opinion.
It's true. And you are doing a whole lot of things. I can attest to that as well. It's I've been wondering about Francois as well. I haven't met him. I have spoken to Charles before. What is what exactly is happening right now as we speak, or this week? What specifically is like he going to do in regarding the updated MRE?
Well, here's my Gantt chart. So this is how we followed, and so basically we've finished the bulk. And I should note, so like we didn't want to say anything until the heavy lifting, and the heavy lifting is the geologic modeling. Okay, so like that and the interpretation, that's all behind us. So now what they're doing is they have redone all the stopes, which stopes are of course are the material that has been mined historically. So we've got our call it our mineralized envelopes, and now we're taking the stopes which have been separately digitized, and then we're snapping them in, so that we can extract what has been mined historically, and sort of get an accurate depiction of the mineralization left over. So that's one process that we're currently undergoing this week. In fact, I'll have an update after our call. I have our weekly update, but that's what we were doing last week. I suspect that'll tail over to this week. That's called depletion, and then we do pit optimization, and then we'll run the internal MRE numbers. We'll look at that. We'll have discussions, see how that all falls, and then we hand it over to the independent QP to audit it. So again, which I noted in our news release, but I'll emphasize this: the initial resource was done by a consultant. This is done by us and Francois. Francois is definitely the key man on the resource and the team around him, but Charles is obviously working very closely with him, and then it'll be audited by an independent QP, so that we're not cheating, we're not crazy, etc. But I think that's a very important part, and reason why this has taken so long is because nobody knows this asset better than our team, and they're not consultants, they are full-time employees, and they've been literally, Francois has been, he's looking forward to a break, I promise you, but he's been totally immersed in this. He works long hours, and we all do, and he knows it better than anybody. And he's not necessarily billing hours like a consultant would. Not that there's anything wrong with consultants doing that, but this is ours. We own it. We've been working with independent QPs just every step of the way in the process, so they're in the room, but we're doing the work. They're agreeing with us, they're giving suggestions, but we're doing the work, and the last step is to hand it to them to audit it, and then we'll put out the news release with the headline numbers and et cetera, and then 45 days thereafter, from a statutory standpoint, maybe it's sooner, maybe it's not, but I'm not getting promises, but then the actual full multi-100-page report will be available for shareholders.
Is anything changing structurally? No, that's not the. When we talk about geology, using structures is it's a dangerous word. As in, like, structure within the report. Like, what, for example, are we going to see silver in this report, or something else that we haven't seen before?
I think you might see silver in this report. We did the metallurgy, and we got actually really good silver recoveries. So I think that is going to be included. I believe it was 300,000 kilograms of silver was payable from the mine during its life. You can do the math on that. That's material in terms of revenue, and potentially a stream down the road. I mean, who knows? I'm speculating there, but yeah, like there's silver there. There's no question of material quantities. In terms of structural, what'll be changed is something we've talked about many times, is the fact that we used to be veins and halos, which was how we defined it. We do not like that. That was sort of defined for us by consultants. We have since changed the geologic interpretation to mineralized envelopes, which is the same but quite different and nuanced, if you will. So they are, the veins, in effect, we sort of view the veins, if we were to go by that terminology, has to be the stopes. But clearly beyond the stopes, there are mineralization that they left over because it wasn't economic. I believe the cutoff grade was 1.5% when they were mining it underground, and also underground constraints has very different considerations than open pit mine. So yes, how the geologic interpretation is shifting to, or has shifted towards, these mineralized envelopes, we believe that's more accurate. We've also added in the lithology, which again, was something that took much longer. So they call it the domaining of the geology in 2021 was based solely on assays. So if it just petered out, it was done. But now we baked in the lithology, which is not necessarily something you have in an Excel sheet. It's literally manual work saying, this is the rock type. So it's basically backup, and it allows you to gain more confidence in the domaining and the types of rocks and the mineralizations that they are likely or known to carry. Again, that lends itself to the quality of this work, and that's the type of thing that the big miners, will expect to see to evaluate this. And I will note, in terms of people evaluating, we have had a lot of people interested in our project. The usual suspects, everybody says, "Oh, well, who's going to buy it?" And there's only 5 or 6 mid-tier copper producers. Well, there's only 5 or 6 mid-tier copper producers, call it in North America. But there's been people from all over the world, various continents, South America, Australia, Asia, who have knocked on our door. Certainly the usual suspects as well as that, and certainly the gold companies. I emphasize we are QC Copper and Gold. There's a significant gold credit by revenue in the resource there, and you mentioned silver as well, and then you mentioned the Roger deposit, which is a copper deposit. We've got the CuEq deposit, which is the 3rd and the 4th mine behind the Opemiska proper, which we haven't properly evaluated and certainly not put into the context of a 43-101. But that was a gold mine, and it's right there. So this is a gold camp, and then you go, you look at the Chapais-Chibougamau district. Just as much, I don't have the empirical evidence to suggest, but it's just as much a gold camp as it is a copper camp. And then in southern Chibougamau, which isn't operationally, I'll note, like we're in the northern Chibougamau camp, which is, us and Chibougamau proper. And then down to the south, you have, call it IM Gold and their Monster Nelligan. That's, again, it's the same district, but you can't ship. I don't think it would make economic sense to ship low-grade material from one project to another. But again, that's all gold, very little copper. So I think there's actually quite a large pool of people who would be interested in our assets. Well, I can tell you, they're knocking on our door. Now, we have let nobody into our database, but that's going to change. And the reason is because, one, our guys are busy, and to sort of hold hands of people getting into the database takes time and effort and distraction. And our primary goal is to deliver this MRE. But it's not done. So there's no point in showing your prospective customer or end user, call it, a half-baked product. But let's just say over the next 30 to 45 days, I think that will be done, and we will start allowing groups into our database to make their own evaluations. And we're very confident. That's what it all comes down to, is getting those very, very knowledgeable groups in our database and having them see it the way we see it, and having integrity in the data.
Do you really want to let them look, though, at an enterprise value of $10 million? I mean, that almost sounds like okay. How come?
Well, I mean, let them look. Why not? I mean, we haven't walked down the aisle at that point, but absolutely we want to drum up interest. And why would we not show what we have at that point in time? I mean, everybody signs non-disclosure agreements in the area of interest, etc. So we don't leave ourselves exposed, but we're happy to show exactly what we got.
Okay.
But are we selling the company? Absolutely not. So let me sort of, maybe am I looking to sell the company at the end of the year? Certainly not. We have a lot of value here to build as a company, and then also we don't need. I mean, we just buy time. I mean, we need the copper market to come back. So we're not selling, and certainly not. I mean, would we take in a strategic investment? Well, certainly that could be considered, but selling the company, absolutely not.
Okay, but doing this in-house, how does that
clear? I am a buyer, not a seller in this market.
That's what you said earlier. Yeah, right. That's a good point. How does that, doing that in-house, how does that even work in terms of because oftentimes you see companies employing mental capital from the outside because it's independent. I don't know exactly how independent it is in practice, but in-house doesn't sound as independent as outhouse.
Well, I mean, to be clear, the independent QP has to sign off and agree as if they did the work, right? I mean, maybe they're not doing the grunt work, but they have to agree with every step of the work. They will audit it and say, yes, I agree professionally. I will put my reputation that this work is good. But it's our work, it's our thesis. It's not like we pioneered this. The big companies do it. But why most people don't do it is because they don't have a resource geologist. Most companies don't have the money or even access to they're not all that common, to be quite honest with you. They're hard to find. It's quite specialized, certainly for the juniors. So most people just, most MREs, most resource estimates are simple reports. And with not a lot of, not nearly the amount of care and effort that goes into most of them than ours. Now, mind you, ours is exceptional in the sense that there's a huge amount of historical work to consider. That's, as I've said in the past, the database that we inherited has been a blessing in the sense that it has fast-tracked this project, because of the amount of information we have on it. But it's also caused delays because that data does have to be transcribed from analog to digital, and then you got to make things snap together and work. So it's been a blessing and a curse, but ultimately, again, overwhelmingly a net positive to be able to have that much data and quality data. I mean, because it was done by Falconbridge, who are fairly universally known as very good operators. There was continuity of operators throughout, so it's not like you got different management regimes in there, which would have complicated things. So, but that doesn't mean that there weren't issues, and accumulating the data, validating the data, making it all match up and snap, because there's different aspects of data. So it's been a massive exercise. It really has, and as I said before, tremendous learning experience for me, and valuable, I think.
I think a lot of people these days look at MREs a little bit like a glorified scoping study, which unfortunately oftentimes it is. It's just not done by the company. But this sounds different. Like this is an actual MRE, in terms of quality, at least, is what you're telling me. So that's that does make a difference. I think, again, that might have been a misconception with the market, is like, hey, well, why are these guys taking 2 years to put out a glorified scoping study? Why don't they just come out with a scoping study? But what's the point of that when your end goal is to create value for a potential buyer? None. And so that's what you're telling me. That's what.
Well, I think if this was like if this was a virgin piece of ground, and it was like a porphyry type material where or like an iron ore deposit where it's like you can drill 100-meter spacings, and there's good chance of continuity. Well, those are easy. But this is not that. This is not that at all. This is a series of veins. It's a huge system. I mean, it's multiple football fields, worth of mineralized veins that go, at depth. We haven't even gone at depth. We've only looked at the near, when I say near surface, I mean open pittable type material. But there's more to the story at depth here. So this is, and you're dealing with stopes, and you have to remove the stopes, and even drilling through the stopes it's not easy. So this project, for all its pluses, has its challenges. But I'll tell you, Antonio, I mean, look, as an entrepreneur, I can't afford to buy something that's totally de-risked, right? I mean, that's how we approach every project.
Yep.
From day one is, is there merit? I mean, I start with, does this have the chance to go into production? Because if it doesn't, because we own this thing, we are married to these projects, whether it's Opemiska or anything else, where's the fatal flaw? Is this, have the chance to be a large mineralized system? Because I don't like small mineralized systems. And then what are the problems? Because again, I can't afford to buy something that has no problems, because that thing's going into production without my work, and the value's gone, right? I mean, so we look to buy things that are not understood, troubled for one reason or another, and assess, can we solve that problem within a reasonable amount of time, effort, and expertise. And that's what Opemiska has been. I mean, Opemiska was sitting around for 30 years in a private company, owned by a very sophisticated family. 3 generations of mining engineers and geophysicists. They knew what they had, but they just didn't have the capital to solve the problems. They looked at, near surface mineralization, near surface mining, small scale stuff. But I mean, and they shopped it around. I mean, guys at big companies knew about it, but they just didn't understand. And all the big guys want to want a really good quality database, right? Because that sort of de-risks it, provided they trust that database. So, as I sort of digressed here a little bit, but this project has challenges, and that is what our task is to do, is to redefine those challenges, de-risk them, allow us to better understand them, and ultimately quantify them and throw them into an economic and engineering analysis, which is the next phase for this project.
How long is that going to take? Because you told me that you've started some of the PEA work. How long? I don't want to pigeonhole you with
Yeah, if I
another,
told you, would you
thing,
believe
but
me? I mean, like, we haven't been hitting our
talk to me
timelines.
about money too. Maybe that's important. That's a more important part, I guess. How much more is it going to cost to get from now to a PEA?
Well, let me answer the timing. I mean, look, I don't want to be pigeonholed in timing, because look, I don't know. I mean, yes, we've started, like, the tough part about a PEA is the inputs, not necessarily writing the report. PEAs are high margin for error. So low confidence, first pass, desktop studies of the economics and engineering of a project. So one could get one done in 4 months. I'm not saying that that's what we're going to do, but you could, because all they're going to do is they're going to say, oh, there's an open pit in Quebec. How much did that cost? And they'll basically extrapolate that onto that, run the numbers. It's honestly, the PEAs are not overly sophisticated. It starts to get materially more sophisticated once you go into pre-feasibility, because that's when the money, we will have to go out and probably re-drill this thing substantially. I mean, I don't know, how do you define re-drill, but like substantial more drilling will be required to publish a pre-feasibility study. But I don't want to get ahead of ourselves. So the PEA, PEA, I think, is totally realistic to expect PEA in 2024. I have little doubt that we could do that, and I have absolutely no doubt that we have the balance sheet to do that easily. PEAs are not that expensive. As I said, they are desktop studies, so the independent, and we won't do that ourselves. We'll certainly be involved in geology, but we'll have, we're not engineers per se, but they will look at that. They'll run comparables. They'll slap it all together. They'll write a report, and it'll come out in terms of IRR, NPV, payback, etc.
So money.
What about it? How much it's going to cost?
Yeah.
I would say less than $1 million. As I said, the report, it's not that expensive, and I would say that's probably, the only thing it's really going to cost us is the actual writing of the report. We've done most of the inputs. We've done the metallurgy. We've done certainly enough drilling for the PEA. It's really just a desktop study. So I wouldn't even say, I haven't engaged anybody officially, so I have not received any quotes, but I would be, pretty surprised if it costs more than $1 million.
Okay. So, well, that's basically telling me, well, it depends. Well, obviously, I'm thinking about financing this year. I'm assuming not needed. Next year, then potentially. But then also, I know that you have sort of the approach of take the money when it's there, not when you need it. So yeah, talk to me about financing plans.
Well, look, I have no plans to finance at 12.5 cents. I assure you. It's all about windows, and the windows are closed. They're shut. And not that we're looking for the money. Again, I emphasize we've got $8 million in cash or cash equivalents, and that's not even cash equivalents. That's receivables coming from the government. And then we've got the baseload shares. So, we're fine. We're totally fine. Obviously, we need price discovery on this resource, but I owe that to our shareholders and see where the value lies. I mean, like, look, hopefully when we first came out with it, what have we doubled or tripled, or, we had a great run, but that, we came from out of nowhere. And now we have expectations, I guess. And so, I don't know how the market's going to react, but I mean, again, I emphasize it almost doesn't matter. I mean, from my seat, of course it matters as a shareholder, and I don't mean to not be very respectful of every single share. I am, but again, this is about value. I cannot control the market sentiment right now. I mean, look at, not that we have anything to do with PMET, but like, look, PMET came out, the resource, and what are they down, 60%? I mean, that's, a very interesting deposit. They defined it, and they're down huge, right? it's almost like, Great Bear. Everybody wants to be Great Bear. Don't tell them what you got. you know, which is not going to be our strategy. But I mean, like in this market, I see, I kind of see the merit, in that and keeping a little bit of mystery, because at the end of the day, I mean, I'm not speaking to the retail crowd. We're speaking to the end users, and that's what that was Great Bear's approach too. Is get, I think they had more than Kinross in the database, and whoever buys us, whoever buys QC Copper and Opemiska, obviously forward-looking statement, but I do believe that will happen. I doubt they'll even they'll read our 43-101, but they will put zero salt in it. They will go into our database, and they will have their own very experienced geologists look at our database and our interpretation. That's it.
Right. It's kind of like women a little bit. Like when I buy flowers often for my wife, and so it started small, and I would always keep getting bigger and bigger because the expectation is just bigger. And now it's like the normal thing. I buy flowers for every week, right? So I come home, she's happy, like a little bit. There's a smile. But my dad never used to buy flowers for my mom, and it's like funny when he does now for a birthday or something. She's uber happy. So it's again expectations. Kind of funny. I don't know if anybody's making sense of this, but that's sort of my
well, first of all, you're quite the gentleman, Antonio, and I hope my wife doesn't listen to this, because I no longer buy her flowers, certainly not on that regularity, but I probably should. But you're right; it's called diminishing returns, and I think that speaks to human psychology is probably the most important. That's why I say sentiment is the most important input into any market. And so look, if the copper if copper had its uranium moment that uranium is currently undergoing, or its lithium moment of 12 months ago, we'd be 4 or 5x, and we just sitting on our hands. Right. Maybe more, because I think people would say, well, okay, well, who does have a great asset in copper in Canada? And they're going to look around. Not going to see many. You got your porphyries out in BC, and I certainly like those, but those are not this cycle. Right? Those are not this cycle. I think QC Copper is like this cycle, not defined cycle. Like, again, this is not being built in 2 or 3 years. No. But it's certainly, it's just sort of the Goldilocks, if you will. It's not a mega porphyry that's going to be $10 billion capex. This is something that can be built relatively quickly, relatively low cost, and actually deliver meaningful metal. So I think this project, and beyond that, I really do think that again, I saw some of the comments. Somebody said, "Oh, well, he compares this to Mallartic and to Detour," and I think I should provide some context on there. I mean, I can't predict that it's going to be, I don't know, 15 million gold ounces equivalent or whatever Detour is. I mean, that'd be nice. It's certainly possible, but that's not where we're at today. I mean, we are at the early days of what Detour was, and more proper analogous, and what I think the intent of it was, I should look it up, is really just about, what did I say here? I got my presentation. It's a proven concept, so I emphasize, and that's the concept, it's taking these old underground mines and reinterpreting them into bulk tonnage. That's really what it's about. Now, is there analogies even further? Another analogy to Mallartic is not only is it, call it geologically, conceptually analogous, but there's a town there, and Mallartic and Osisko guys are quite famous for moving the town, a significant portion of the town, and reinvigorating the town, taking what was a very, very sleepy town at Mallartic that used to be energized when the mine was in operation. And now I've been to Mallartic many times. It's actually a wonderful place. You can go and stand and see the open pit and watch these big cat trucks move ore, blast. Well, you can't see the blast, but you can see them move ore. And the town is just doing great. You got all sorts of insurance deal. I mean, it's a town. It's so it's a thriving economy, and that's again what we intend to offer. And in fact, the townspeople, not the townspeople, but the leadership of Chapais have been down to Mallartic, and they're doing their homework and seeing what can be done. And we that was all at our suggestion, and we encouraged them to do so. So again, going back to that, I mean, I don't know how many millions of gold equivalent ounces or billions of pounds. I think it's going to get a lot bigger, certainly in this open pit. And then, but really, this is about the district. Okay, so I have an extremely specific view on this entire district, which is just totally pregnant with copper, gold, silver, and other metals with that have yet to be defined, and also potentially maybe some serious discoveries that we're not necessarily thinking about or looking for, because we're not really doing, call it exploration work. We're doing delineation, which is also not particularly sexy because we're sort of in one of the troughs of, let's call it the Lassonde curve. But we're going to get to that. So again, using an analogy, look at what like Detour has grown by orders of magnitude. Even recently, they expanded it significantly, and then Mallartic as well. Now they have the Odyssey. They put 2 new shafts in the Odyssey. They didn't really know what that was back in the day. So where there is gold there and copper, there is more to be found, and we're not just blowing smoke because there's an awful lot of call it exploration drilling that hasn't been followed up on our own project. There are other deposits all over us within a very reasonable and operationally accretive radius, where if you had a large scale mill at the foot of the Opemiska, these other deposits could serve as feed, including the Roger. But then again, also we have our own. Like we're not done exploration drilling. Even it's not even exploration because we got the CuEq and the Robitaille, which are the 3rd and the 4th mines that we have not really drilled well. We've done some poking in the holes, but we haven't systematically drilled it out like we have done on the Springer and the Perry, which is the Opemiska as we are currently talking about it. So there is a lot of growth here. There's no question about it. It's growth that we see, and that we have a reasonable amount of surety that there are more tons, economic tons, that could be sent to Opemiska, but also just stuff that we just don't even know is there.
Canadian Mallartic is I think one of the first mines that I saw so close to mine. As a European, it was weird to me to see it that way. But just to give people an idea, I'll probably have a picture up right now, but there's a baseball field right across the street of the mine. And so if they hit the ball hard enough, it's going to fall in the actual mine. Like that's how close it is. It's just on the town, or the town is on the mine, which is what it is for. So these things actually do happen. It wouldn't be out of the ordinary.
All over the world, Antonio. I mean, this is not unique. I mean, like, look, every open pit that exists, there is a community right by it that exists because, a lot of manpower. I mean, so it's hardly outside of the scope of reality. I mean, far from it. I mean, this is what's required. The question is, how are we going to, move ultimately? If that's the decision we make, we go through the trade-off studies, and we are required to move, call it 1 house, 10 house, 30. I don't know. How are we going to do that? And are the locals going to cooperate? And I anticipate that they will. They have been cooperative. A, because we have been straightforward, and B, because we communicate and talk about the benefits and are straightforward as possible. But I think it comes down, and it comes down to economics as well. Everybody's going to want a fair price, which will have to be considered in the context of what that ground is worth. You can't pay $100 million for a house, right? So that would be prohibitive. But nonetheless, we see precedent certainly in the province of Quebec, and we see precedent all over the world for having communities operate safely, responsibly, with obviously consideration for the environmental impacts that open pit mining brings next to a community.
Well, they say money can solve almost all problems besides a midlife crisis, and so I do assume it's going to be solvable with money, and that's exactly what I'm wondering about. How much does that add to CapEx in terms of not necessarily in terms of amounts? Well, if you know something, do tell me about it, and if you're allowed to tell me. But does it percentage-wise, does it make the building of a mine there like twice as expensive?
Well, first of all, I would disagree that you can solve all things with money. You cannot. It takes time, it takes communication, it takes trust when it comes down to dealing with communities. You can't just walk in there at the last minute with $1 billion and expect to get what you want, because first of all, that's not economic, and second of all, you're going to run into external issues. So it's a process, but you can't do it without money. So money is an important part of the equation, but it's not just about money. It's about communication, respect, trust, doing things right, as right as possible the first go around. And that's the approach we've tried to take. But make no mistake about it, if we were to move a town, it would be more expensive than if there were no town there, or no houses, or no structures, or whatever. How much more, I can't tell you. But we're just not there yet, and we're actually, as I've said earlier, we're not certain that that's the route we'll take. It will require a mine plan and a trade-off study.
I think I went through most of the mine-related questions. I want to talk about Chibougamau as a district as well, but just I know this is sort of jumping back, but it's a question that I have on my list and I didn't get to ask. It's about the baseload shares, because as you were talking about them just now, you sort of equated them to cash. They count as cash and cash equivalents on your balance sheet, sure, but is that how you look at them? Like, would you turn those shares into cash anytime you need them, or are you also going to try and time the trade a little bit with the uranium market?
Well, the answer is it depends. I mean, they're not cash. They're not cash. And so, like, if I were to go and hit a sell order for 10.7 million shares, that wouldn't be good for baseload, and it wouldn't be good for QC Copper. We are the largest shareholder of baseload. So what's good for them is good for us. So that process has to be managed appropriately. So, if it were cash, I wouldn't have to have those considerations. Given we have $8 million in cash, I'm not forced to make that decision today. I am a believer in uranium, the future. I think uranium is such a good solution. That's why people don't like it. I really do.
Yeah.
And when I say people, I mean, those who, don't view the world maybe like I do, but that's fine. It takes all sorts to make a market. But, I believe fundamentally in the utility of uranium to solve many of the Earth's and people's problems. And I wish we got over that hump and started doing it efficiently, responsibly, etc. So I do, I'm a big believer in uranium. I'm very interested in James Sykes and what he's done in baseload. I think he is top notch, not just in his ability. Someone called him a bloodhound for uranium. And I think he's got a nose. I mean, but he's not just lucky. He's really good, and he's exceptional. And I deal with a lot of geologists, and James is exceptional. And then the discovery that we made, and I think there's a lot going on there. So all else equal, I do think that baseload's price is going to go up. I mean, look, we sold the last batch at $1.15. Now we're not even 50 cents. So I think it would be prudent to be patient and bide our time. Obviously, QC Copper is going to sell its position. Clearly, I mean, we're not in the baseload shareholding business. QC isn't. We are in the moving forward our project business and trying to be prudent allocators of capital.
Sure does. I just want to talk here at the end a little bit about the Chibougamau district. It's just an interesting place to me. It's if you look at it from a sort of 40,000 foot view perspective, though, it is quite fragmented. Like there seems to be a lot of ore, I guess I could call it ore. Yeah, that could be extracted there economically. But do you believe this district will eventually have to be consolidated, put under, like, as you said, one central processing facility, or like one person or group doing it?
Yes.
That's easy.
I don't. No, I mean, look, it's okay. So let's talk about that district. Okay, so there are three other call it players or assets of significance. I think they all should be under one roof. Certainly, if a big guy is going to come in, a big guy to find a big mining company, they like to have things wrapped up nice in a bow. They don't want to have to fight juniors. And as soon as a big guy comes into the area, then the juniors think, oh boy, big money. And so everything, like, I think it makes sense to wrap that district up when the time is right. And you don't just buy anything, okay? Because sometimes anything is worth nothing. It becomes a liability. But there are definitely assets that are operationally, I think that's important, operationally synergistic to what the Opemiska can and I think will become. So there are deposits there that on their own are not, will not be economic in the foreseeable future, meaning they just aren't big enough or high enough grade or close enough to surface to justify their own operation. But if you put a big mill there, And all, your only real expense for that deposit is to dig it out of the ground and put it into the flow sheet. So provided the flow sheets can be harmonized, it could just totally reinvigorate that area. And I do think that opportunity exists. I mean, look, it was in production for decades and decades. And I see no reason why, especially when copper does get its legs, and it will eventually, why that can't be very interesting again. And again, I'll emphasize that I'm a big believer in infrastructure, a big believer in the United States, and I think that this jurisdiction is going to be exceptionally valuable in time, because the biggest customer for copper is going to be the U.S., and we're going to be right there. So I think that the price that we can acquire assets in that area, put it all together, when you have a long-term view, it's extremely accretive. Now you're just gonna, I don't have any empirical evidence to support that, but that's my vision, and expect me to chase that.
I think I kind of knew that answer was coming, and what I was getting at more was the who of the whole story, like who's going to be consolidating. So I'm probably overstepping here, but looking at the history of some of the families, like the family behind G Mining, for example, it doesn't look like they'd be uncomfortable doing more work in Quebec. So are
well,
you
Louis Gignac, the patriarch, Hall of Fame, Canadian Hall of Fame member,
yeah.
He worked at the Opemiska. He knows the Opemiska, so they're no strangers. Anybody who's got a history in Quebec is no stranger to Opemiska. So, look, I'm not gonna show you my cards just yet, Antonio. You're gonna have to stay tuned to see who I'm targeting, why, and when, and how much we can do it at. But look, I think we got a shot at doing it. But again, it's all about timing. To do M&A is complex. Not only do you have to convince yourself that you like the asset, that there's value in that asset, and there's no fatal flaws, but then you have to get the other party to agree. And there are a never-ending stream of reasons why oftentimes your counterparties don't agree. And so sometimes, you have to be compelling, meaning a premium. Sometimes they're in a situation where they have little choice. It's just complex, and then you got to get your shareholders inside, and you're never going to please everybody. So it's complex, but it's something that we've done a number of times, acquired quite a substantial portfolio across Canada by doing that. And I'll note, I've done it in times like this. I don't like to buy things in 2011. You should be selling things in context of 2011. You should be buying things in the context of 2022 and 2023, because companies are distressed. I can tell you that right now. The availability of capital for them is the prospects are not good, and so some companies have the ability to batten down the hatches and just sort of come back another day. Other companies have specific situations where they have cash calls. It's too many permutations to really discuss, especially where we're not ready to do so. But I'm just talking again, like, conceptually, now is a good time to buy assets. And I've done that with, ORCAP, for example. That's exactly ORCAP, which is a shareholder of QC Copper. Its raison d'etre is to go out there and buy assets specifically in special situations. So as I said, maybe I'll repeat one last time, I'm a buyer, not a seller right now.
All right, Stephen. That's it. This was fun and informative. Thank you for it. I don't have any other questions. What am I forgetting to ask you, though? What's something you should be talking about, but we're not?
I think we've sort of covered the gamut there. What I will encourage is just, anybody to reach out to me directly. I am pretty good, very good at responding to shareholders who have my email, which I'm not hard to find. Send me an email, give me a call. I make myself available to shareholders.
Email and phone number is on the screen right now for people watching, for people listening. If you want to check that later, I'm going to put it in the description of this video so you can reach out to Stephen. He is responsible too, but also responsive. So I know that from personal experience. So yeah, Stephen, thank you so much for doing this.
Pleasure, Antonio. Thank you.